Okay, this is going to be a weekly recap from the 5th of July to the 8th of July. So that was 4 trading days, and I had a total of 12 trades. 7 of them were green, and this one I did not count, which was a pretty big loser, actually, huge percent loss because of the fact that this was a very speculative trade with SIMPQ, and I only traded an $8 position, but it was a very widespread penny stock. So for that reason, I'm not including it because I were to have traded this with a much larger $30 risk level. But because I traded an $8 position, of course, it's impossible to lose $30 on a long position. This was just a speculative trade, so it's not in my stats. And my winning percentage was 58%. It was pretty much a scratch week. It wasn't anything too impressive as in, oh, I made a whole bunch on this trade. This trade was super nice, but I think I went through a lot of scratches and a lot of learning, which is still good. And 63% of my trades were according to my dollar risk level. This was my first week with a $30 risk level, and I'm going to stick to a $30 risk level because I want to see more consistency. I want to see myself trade closer to that $30 risk level and also trade and be much more profitable. So again, this was pretty much a scratch week. My average dollar gain was slightly larger than my average dollar loss. My percent gain was a bit higher than my percent loss. Pretty much break even. Even the time right here, I ended up making just under $7 with $1,100 of dollar volume traded. Let's go ahead and go over the setups one by one because although they were scratches, I still learned a lot from it, and it just in theory increases my odds to be more profitable and better the following week. And let's look at the first trade, which is GCLC, and this is an imperfect morning panic bounce play. Let's look at GCLT for the 5th. 5th is right here, so it's the first red day, or at least maybe in the beginning because it did open much higher. It did look like the third green day, but it did downtrend. And let's look at the 5th, which is going to be right here. I was long at 9:41 a.m. 2,600 shares at 323. So 9:41 was a bit sooner. Let me zoom in a bit more. 9:41 was right here, and I got in at 323. So why did I get in? It looked like a morning panic bounce play. You can see how it kind of had this wick right here all the way to the 4 cent level. It got as low as this 3 cent level, which doesn't seem like much, but 4 to 3 is like a 33% drop. So there was definitely range, but it wasn't a perfect morning panic bounce play because this was on a gap up. If this thing were to have opened right where the previous day closed and then dropped 33%, that would have been a lot better. That would have been a proper morning panic bounce play, but because it sold off of a gap up, that made a imperfect morning panic bounce play setup. And I did get out at 9:45 at 325. So right here, 9:45, 325. I probably got out of it right here, my entire position, and I think this was a mistake that I made right here, but I did give myself some slack. Essentially, this morning panic bounce play setup worked because you can see it went from this 325 level as high as 44, or if you just want to count the first uptrend, it got as high as 38, which is a very nice move towards the upside. But I felt very uneasy holding on to it, pretty uncomfortable. And what I did was is that I cut the entire trade completely, which was a mistake because it didn't break my risk level. Whenever, which is something I'm trying to do, a setup is not going that well, but it hasn't broken my risk level. I'm going to try cutting half of my position, and then if it breaks my risk level, I'll be cutting the other half, and then at least, when it wasn't looking right or the way I wanted it to be, I did cut half of my position for about break even, so I'm not cutting my entire position on a downtrend because it breaks my risk level. But then if it does work out like it did right here, I will at least still have half of my position to sell on an uptrend and be pretty profitable. So there was plenty of room for improvement, and if I do something like that again, I'll knock my stats a bit lower. I did give myself some slack because it was the first day of the week, and that was with a new $30 risk level, but I definitely don't want to make a mistake like that again. And let's see what it would have been like if maybe I sold half of my position at 325 around that same level, and then maybe I sold the other half at this let's say this 368 level. So maybe in the middle, my average would be 343. Let's just see what that would be. That would be a lot nicer, a pretty good percent gain. And that would be, again, if I were to have cut half of my position instead of all. And then maybe I sold when it was a bit higher, when it broke past VWAP. And for whatever reason I sold there. It's just, you know, in theory. And I have a sell right there. So that's definitely something I can continue to improve upon. And I didn't make this mistake for the rest of the week, which is good. But I'm glad that I still tried this setup, even though it wasn't a perfect morning panic bounce play, and there was definitely a lot of room there for improvement. Let's look at the next trade, which is on the same day, same stock, but this is now a different setup, a run towards higher day breakouts. I was in at 1023, 3,000 shares at 393. So 1023 was right here, and I got in at 393. So right around right here is when I got in. And why did I get in? Because it did do that uptrend, it did downtrend, it held VWAP it in, really break significantly below it, and it started to make a move towards the upside. And I got in it because it looks like it was going to potentially make a room, not a room, but make a move towards the higher day right here of 4 cents. And you know, I'm in at 393 because it's also breaking this level right here. I thought, you know, okay, it's uptrending. This thing can break this level, break the day high, then it can be a nice run up, and that will be something nice to sell into. I did get out the very next minute at 1024, and that was at 3975. So I didn't really hold on to the setup that long. And yeah, I got out right around right here. I think somebody's at the door. I'll be back. All right, I am back, and I think I remember where I was. I got out at 1024, which was right here. And let me see my notes to see if there was anything about it that made me want to get out. It looks like I did get out in two pieces. Right, there wasn't much context besides that. It didn't really seem to uptrend that much either. Maybe I saw something in the price action that didn't look very good, and I got out kind of early, but it did downtrend. And there was a point when I was interested in the head and shoulders buy where you have the shoulder, the head, and then I think that it can try to drop and then make like a little dip so I can buy right there and then sell into a shoulder. And it was just not enough volume for me to consider it. But it did, in theory, make that shoulder, and it did break the day high one more time. But it seems like one of those type of things where you need to buy it on the dip, because if you buy right at a breakout, the range isn't really that nice looking. Let's look at the next trade, which is GCLT. And this is going to be on the 5th. Is this the same stock? Yeah, this is the same stock, but it had the afternoon panic. All right. Let's look at GCLT. I was in at 3:37 p.m. at 28, so that was a bit speculative. Yeah, I did have a sell-off right here. I guess I'll do it from when I had that trade to the end. And I got in again at 3:37.28. So right here is when I got in. Yeah, it was a late day panic setup, a number 5 setup, but I was super speculative with this one because the panics that tend to happen in the afternoon do not really work that well, and they more often than not keep downtrending or just not offer that much time for a rebound because the day closes and everything. So I did take that speculative trade right here at 28. I did see, I guess in theory, that bottom was forming and the price action and everything put together. I bought right there at 28, and I did get out at 29 exactly, and that was the very next minute actually. So at 3:38 is when I got out. And I think what happened was is that I got in, but then it just had a really freaky turnaround and uptrend, and I wanted to sell because I've seen that happen in afternoon panics when it just drops a lot, finds a bottom, then it bounces a whole bunch, and then it continues a downtrend, as you can see right here. It did eventually hold this level, but it didn't uptrend too much, and I think that was a pretty good sell for what it was right there. at 29. Very speculative trade, and I didn't trade enough size. As you can see here, I should have had, I guess, maybe 6,500 shares. That would have brought it closer to a $30 risk level. So that was a trade. I didn't trade the right amount of size, but that was a pretty good setup for what it was. Super speculative and risky. I could have lost on this one. Let's look at the next trade, which is on the 6th, and this one really did not work out. So I put a big no for this one. Let's look at CHNC for the 6th. The 6th is going to be right here. It looks like it was trying to be the third green day, but it ended up being a sell-off day, and it has downtrended a little more. This will be something that I would be interested in buying if it tries to maybe break past the 40 sub penny level convincingly, or maybe even 45. 45 might be better, but let's go ahead and stick to this day right here on the 6th, and that was right here. I was in at 9:30, right at the market open at 47. So right here at 47, I got in, and what did I get in? This was like a thing where the previous day high was, as you can see, 44. We open a bit higher. We open at this 44 level. So actually, we opened right at the close of the previous day, which was also the high of the day. We open right at the level. It starts to uptrend. It looks very nice. It's going to continue and be a morning spike, ideally in the morning. And as you can see, this one did not work out, and it downtrended pretty massively. It got as low as 33, and I did get out of the setup the same minute. I only held on to this for just 22 seconds. I got out at 46, so I probably saw something in the price action that I didn't like after I was in, and I got out, which was a good call. And yeah, it didn't work out. This one really didn't work out because it didn't just not work out and it just consolidate or downtrend a little. This had a panic. And again, the thing that I was interested in was that this could be the third green day. It breaks past that 44 level, holds it, and then it continues to make a move towards the upside and be a nice morning spike. So yeah, this one did not work out. I did a pretty good job getting out of it because I didn't like the price action. That's what I said right here. Sold on bad price action, good overall. Let's look at the next trade, which is a morning panic bounce play for this same stock. So I did trade the dip. I was in at 936, 30,000 shares at 36. So 936 was right here, and I got in at 36. So why did I get in it? Again, this now turned into a morning panic bounce play in theory. It did have a bottom around this 34 level, a quick dip to 33, but mostly it was at this 34 level, and I got in right here at 36. This one was nice. It made it move as high as 44, and I did get out just 2 minutes later at 38. So 938, 38. So 236s and 238s right here is when I got out at 38. And I probably did not trade this one as well as I could have. Maybe I sold in two pieces. I did do my best here. It seems like I did at least do the thing I was talking about where I sold in two pieces. And I sold half on an uptrend and then the other half when it broke the trend line. So I guess if I were to draw a trend line from this bounce, maybe something like from the wick perhaps to here. This might have been something like the trend line that I used on that trade, and that makes sense. That's why I got out at 938, at 38, even though it did continue to uptrend more. Essentially, I got in at 36. I sold one half on the uptrend maybe at 37. And then maybe here I got out at 39 when it broke the trend line, and then it kind of maybe came back and I got out, and that averaged out to 38. So yeah, this one did offer more move, but I'm pretty happy with the way I'm trading it so far because I just don't really have that ability to just hold on to a setup for a longer period of time after it breaks the trend line. If of course I could have maybe have slightly adjusted it. Hindsight is 2020, and then I would have been able to hold longer. But I think that was a good attempt for what it was. This one really worked out, and I think I did my best with that one. It was a 5% gain too, and I did put that this one really worked out because I mean it did get as high as 44. So let's just see what a sell at 42 would have been. Just speculative. Yeah, just over 15%. Let's look at the next trade, which is going to be right here, VXIT. This is another OTC. I did have two list stocks. I guess most of these were OTCs. Previous day high breakout. So very similar to the other setup that did not work out. Let's look at VXIT for the 6th. The 6 is right here, first red looking day, although it did offer a pretty massive dip by opportunity just by looking at the wick. The 6 is going to be right here. It looks like that panic was later in the afternoon, so I think I didn't see this, but I might have even have considered buying it even though it was in the afternoon just because they can be very volatile. Let's go ahead and look at the setup. I was in at 1018 at 62, so 1018 was right here and I got in at 62. Why? The previous day high is also 62, so when I got in at 1018 I was buying it right at 62, and it probably looked like to me at the time that it was going to break 62 and continue the uptrend and get much higher and much more profitable because it's like a breakout over the previous day high. It's up on, a few days, and it can be something that can continue the uptrend. And what happened is that this one just had a very large seller with hidden size at 62. I eventually got out. I did cut the trade, but it did lead to this panic, and just out of curiosity, it's still hanging around this level, and this could be a nice thing to rebuy if it continues to uptrend and maybe break past that 60 sub penny level. But let's see when I got out exactly. I got out at 1025, 61.5. So right here, I got out at 61.5. So that was my average. I'm pretty sure I sold this in two pieces, and that means I did sell half of my position at I think 61, and then the other half is 62, so that brought it to 61.5. It was a scratch. It could have really worked out if it were to have broken past 62, but there was that large seller there. I think it was still a good attempt for what it was. Let's look at the next one, which is CMGR on the 7th, and this is a first day, third run, dip buy, trendline break. So let's look at CMGR for the 7th. Right about here is the 7th. Right there. So we had the first run up, second run up, and then I was in it right here thinking it was going to be the third run up. It didn't really end up being much of a run up, but it did have volume. Let's look at the 7th, which is going to be right here. Essentially what I was thinking was, this one went from, in theory, this sub penny 25 as high as 2 pennies, which is massive, and then it had a sell off, and then we had a second day, and this one was smaller. Of course, it's like a bouncing ball. Every bounce is a bit less, 58 to a penny, almost a penny and a half. And then we had this one, and it had a nice morning spike, and then it started to sell off pretty massively, and I thought, maybe it's not going to bounce that much, right? But I think it's going to bounce more than where it is right now. So when it was downtrending and then it broke a trend line, which I can draw briefly, maybe something like this, right? That's when I considered to long it, because I thought maybe that downward momentum has been broken by breaking the trend line, and now I can, in theory, maybe consolidate a bit and uptrend and get past VWAP. In best case scenario, it breaks the day high and it does something really impressive. So I got in at 9:49 a.m. at 44. So that was right here at 9:49 at 44. I got in right when the trend line broke, and from what I've been experiencing, I might try to be more patient on some of these, because when it breaks a downtrending trend line, it might not immediately just bounce it unless it's like a very high volume morning spike kind of setup, or something with a lot of momentum and price action. Sometimes they kind of break it and then they do something like this where they downtrend a little, consolidate, and then it makes the move later. But that was my entry right there at 44, and I did get out at 10 o'clock, and my average was 45 exactly. So let me just make sure the time. Yeah, it was 10 o'clock. I got out right here at 45, I believe. Yep, 45. It didn't really move that much. It didn't get to VWAP. Well, I guess it got close, but it didn't really get to VWAP. It didn't break VWAP. It didn't get near the day high. It didn't break that. So this was pretty much a scratch too, but it did uptrend. And maybe I could have been a little better. Maybe I could have tried to risk the idea that maybe it's not going to immediately turn around and it might downtrend a little, and then I'm going to be in, I guess, at the same point, 44, but maybe have more patience because I'm in the setup a lot later than, holding through all of this right here. It didn't really work out that much, but if it did, it would have been pretty impressive, and I've seen stuff like that work out. Let's look at the next trade, which is a listed stock, EVFM for the 7th. Let's look at EVFM for the 7th. Very interesting stock because this thing is impacted by Roe v. Wade, and this is like something that could maybe try to benefit from the overturn. Let's go ahead and highlight the day right here as close as I can. I got in at 1018 at 134, and this was a VWAP dip by approaching multi-day breakout. So let's look at 1018, 134. 1018 was way back here. Let me just zoom in a bit more. 1018 was right here at 134. Why did I get in it? It did have a nice spike. It went from the 120s as high as the 140s, and then it had its first dip under VWAP. And this wasn't just a dip under VWAP, but I thought it could be a dip under VWAP and then eventually over a longer period of time break the day high, which was the case. It did uptrend. It just took way longer, and eventually I am trying to practice and get better at it. I want to be able to hold through something that takes a long period of time, that never breaks under VWAP in this example from this previous level, and then eventually do what I think it's going to do. This thing had a lot of positive bullish momentum, but I traded this one super speculatively because I haven't really felt that good trading listed stocks, at least compared to OTCs. But this was a very nice dip buy, and this could also have been like the head and shoulders thing where, maybe this is a shoulder. I'm in it at the dip buy, breaks this level immediately. Now it's the head of a head and shoulders, and I can sell into that breakout, especially because this thing was also like a multi-day breakout around that. I guess that was a bit earlier from when I looked at it here, but this was also a multi-day breakout over, I guess, this 120 level, which was pretty impressive. I forgot the exact price point, but this was a pretty nice move overall, and I did not make much. I got out at 1023 at 134.16. So yeah, essentially it looked like it was gonna uptrend, and then some short seller with like 300,000 shares just dumps it and tries to make the price action look ugly. And me trading it super speculatively, I got out for that reason. But I'm so happy to see it later. All the massive short sellers just got squeezed, and that was pretty cool to look at. Let's look at the next trade, which this one did not work out. At least it wasn't like a break even. I did try one more time. This was an intraday high day breakout. 1054, I was in 40 shares at 140. So 1054. I got in right here because it was breaking, in theory, the day high around that 140 level, and I got in, and it was just like a big volume thing where, it broke it, but I think some short seller, or maybe it was just regular price action selling, brought it all the way back under, and then it did downtrend. But again, with the thing in mind, it never broke under VWAP, and it eventually broke that level, that 140 level, and it continued to head much higher, which was super impressive because it did get to the 150s. And this was something that you can trade with a lot of size too, because it is a listed stock. I did get out at 136 at 1105. And why did I get out right there? Right here, 1105. I had a trend line, and I just wanted to play it super speculatively, again, because of that trend line. And I think I had something like this going on. So when it did break under it, right, and it got to this level, I did get out of it officially. But yeah, that was impressive. And you might even say that this was also inverse head and shoulders, a shoulder, and then the head being right at VWAP, which is nice. It uptrends a little, baby shoulder, and then it breaks it. And this was pretty cool to look at. In theory, I can be a part of this. I was watching it when it was breaking the day high, but I didn't take it. I think next time, in theory, God willing, I can be able to be a part of something like this and If I can see that I'm trading better with listed stocks, then I'll try to move my dollar risk level to something higher, like $10. Let's look at the next two trades with SYXX. The first one is on the 8th, SYXX. And the 8th is going to be right here. Not a very significant day, but it did have like a gap down, and I think that's what I traded right here on the 8th. I'll probably have to highlight this one a bit closer. I was in at 932 at 266. So right here at 932, I was in at 266. So I was in it right here. And why did I get in it? Let me zoom in a bit more actually. Right here. Actually, if I get rid of this date, that'll look better. Okay, yeah, right there. 932. I was in it right here at 266. Why? Because it did have a drop. This thing, as you can tell from this candle, closed. It looked like at 393, and then we opened, right? Much lower, and it did downtrend. So I thought this was like a morning panic bounce point with a gap down, and those can be pretty profitable. And again, I did get in right here at 266. This one did not really work out, and I did get out of this one for a loss. So I got out at 944 at 261. I was patient with it because it never broke this level that I was risking, which was 24. But again, I did get out at 944 right here, and that was at 261. So I did lose a little bit. Most of these have a gap down, and maybe it will immediately turn around, or in some of these gap down setups, it will continue the downtrend after it opens. And then it tries to find a bottom somewhere, consolidate, and turn around, and those are pretty nice. This one just didn't really work out that much, and it's not like it had a huge gap down anyway. And yeah, that was pretty much it for that one. It was a scratch, but I did trade this again, and this was a different setup. This was now a symmetrical triangle breakout. I was in at 955, 4,000 shares at 267. So right here around this level, just to be sure. Yeah, 955 at 267. So right around right here is when I got in at 955. And why? Once again, it was a symmetrical trend line, so I had something like this going on. Let me bring this one to the right. And then in theory, something like this. And yeah, you can see around this level at 955, it was breaking past the trend line of this symmetrical triangle, and it was breaking the upper part, which is ideal, of course, not the lower part, because if it was the lower part, that would be a short setup. And I was in it right here once again at 955. I did get out of this one 1017 at 272. So let's look at 1017. Right here is when I got out. So right here, but I did sell in pieces. So my average was 272. I got out in theory right here all at once, but no, I actually sold in a few pieces, and I think I sold my last piece right here because it was breaking this trend line, which was now something I was risking the rest of my shares off of once it started the uptrend a little more. Again, this one didn't offer that much meat in the bone. It could have been much higher, could have uptrended much more. And I've seen stuff like with SYXX where it just has no volume, and after some kind of a downtrend, it just goes up so massively. That wasn't really the case right here. It was a symmetrical triangle, and I think I traded this one the best that I could. Didn't really make that much, but I did trade the right amount of size, because if it were to have failed, worst case scenario, I would have been out just around that $30 risk level. Let's look at the last trade, which is SIMPQ on the 8th. This one was a pretty impressive one, and I did miss out on the first run up with this one, but the setup I took was just something very tiny, just very speculative, but it did impact my overall weekly performance because it is something so massive. It trades with such a wide spread that you know, it's still impacted. So let's go ahead and highlight maybe from this level exactly. I guess this one's going to be kind of hard to read. I'll probably just maybe zoom in from here. That looks way better. Okay. I was in at 158.24, and that was just 50 shares. It was an $8 position, and this was a reversal long trend line break. So let's look at 158. I was in at right around here, 158 right here at 24. So I got it right around here at 158. Why? Because this thing was having a downtrend, and it was downtrending the entire day. But once it looked like it was trying to break this trend line right here, and it was consolidating, I bought it right here thinking that it was going to continue the uptrend some more. I even saw like a person on the bid around this time period flash 100,000 shares, which was also very bullish. It did not work out. It did downtrend, and it didn't get to a VWAP or anything like that. And even though I traded such a small amount of shares, if this thing would have gone to just VWAP, maybe under it, like if I were to have gone out at 32, this one would have been pretty nice. Even with this tiny amount of shares I had, it would have been a pretty massive percent gain, as you can see right there. But it did not work out. I held it for a while, and my risk level was was breaking this 16 level, which was the low before it broke the trend line. Once it looked like it was going to be breaking the day low around the 16.5 level is when I decided to get out. And that was exactly the case, because I did get out around that price point at 240. So 240 was right here. Actually, was it 240? Yeah, because the chart looks kind of weird. Right here, yeah, around right here. I got out at 16.5, so probably right around right here. Yeah, exactly this candle. It just didn't work out. It got to the day low, and it looked like it was going to break it. It did hold it for a little bit, but as you can see, it got as low as the 11s, which would have been a lot, even with the $8 position. Imagine if I didn't stick to my plan and got out at 11. Imagine losing, half of your money, even though it is an $8 position. That's just the way this stock is. It offered a pretty crazy move, and it also offered a pretty nice downtrend towards the bottom. That's pretty much it for this week. If I could have changed anything, I could have been patient on some setups that worked out eventually, but I didn't sell in pieces, but I sold everything at once when it was still uneasy looking. Probably could have avoided this one or just traded a single share just because it was a speculative trade. But hindsight is 2020, because if it were to have worked out, even with that tiny amount of position size, it would have been a really massive move towards the top. And yeah, that's pretty much all I have for this week. I'm going to continue to trade, God willing, with a $30 risk level, and I just have to keep going. Overall, a scratch, but it could have been very profitable if I just did a few things better, and those are things I have to continuously continue to work upon. That's all I have for this week.